Hello, everybody, and welcome to UFile's Your Taxes Your Way podcast. My name is Ida Celli, and I'm with our tax expert and my colleague, Gerry Vidoratis. Hi, Gerry. How are you?
How's it going, Ida? Hopefully everything
Pretty,
good?
pretty good. Yourself?
Pretty good, pretty good. Still cooped up in the house, but at least we're safe and sound. That's
That's
that's all
right.
that
And it's a
matters.
beautiful day out there.
Yes,
Spring
absolutely.
is here, so.
Absolutely. Absolutely. So what are
All
we talking
right.
about today?
Today, our subject is the sharing economy and the pandemic. As
Okay.
we've noticed, some people, in order to to be able to have some income, have taken some little side jobs in order to make their budget needs. It's not only during the pandemic; this happens all year round now. But what are the examples that fall within this gig economy?
The typical example would be essentially the sharing economy type of apps, right? So we're talking about Uber for taxi services. We're talking about Uber Eats and Skip the Dishes when it comes to deliveries, food delivery services. So these are the typical examples of what people are using right now. Quite frankly, to make ends meet. Let's not kid ourselves. The pandemic
Hmm.
has been really harsh right now for everybody. A lot of people, a lot of people right now. We're in 2021. A lot of people, some of them have not even gotten their jobs back since the beginning of this pandemic, which was last year. So in order to make ends meet, they start doing what's called, certain gigs on the side, right? And that's essentially what these sharing economy apps allow you to do in a very quick and efficient and easy way. You can start making money on the side using those apps such as Uber or Uber Eats or Skip the Dishes.
Okay, people earning some income from these kind of odd jobs, let's call them, or gig economy jobs, what are they considered for tax purposes?
So they're considered self-employed. Okay, simple as that. So this is essentially for the government. This is a self-employment income or like a business. Okay, so that's essentially what it is. So it's not considered employment income because this is essentially a gig. You're doing this on the side. Okay, and what the government would consider this is essentially, a business income, and in that case, you would be required to file specific forms to include that income, which is the T2125. And if you are a resident of Quebec, you would have to also include a TP80 form. So just remember, this income is taxable. Okay, it's considered a business, considered self-employment income. So therefore, it is taxable income on your tax return.
Okay, what would you tell these people how to start to get organized in order to be able to report this income on their taxes?
My biggest tip to everybody would be to get a really good accounting app. Okay, so find yourself a really good accounting app. Just like, I mean, let's not kid ourselves. Uber and Uber Eats and Skip the Dish is really revolutionary technology, right? Within a
Hmm.
couple of clicks, within a couple of minutes, you're basically, you have your own business, right? And you're able to start making money pretty much right away, and they funnel clients towards you, right? That's essentially what these apps do. Well, there's also innovative apps when it comes to tracking your income and your expenses. Okay, and there's a lot of really great apps out there, very innovative, that you can use in order to, be able to properly account for all the income and the expenses that you have. So I would strongly urge everybody to invest in one of these applications. This, you might think it's expensive, but believe me, it is not expensive in the grand scheme of things if it could properly produce for you and track for you all of your income and expenses.
And what else is important? We need to keep the receipts, right?
You have to be able to track. Okay, you have to be able to track these expenses. Okay, and when it comes to things like Uber and Uber Eats and Skip the Dishes, there's one commonality between these apps is that you're using your vehicle. Okay, you're using your car in order to gain that income. Okay, that's the commonality, and because of that, the CRA is going to require you to keep a logbook. Okay, and the logbook, the purpose of it is to track your business mileage. Okay, so of course, for a lot of these individuals, unlike somebody who's got a standard taxi license, these individuals are using Uber or Uber Eats to Skip the Dishes. They're using their own vehicle, okay, to provide these services, right? So of course, your own vehicle, you're not using it 100% for the business, okay? It's a personal vehicle. You're using it for your own personal reasons, and you're using it for the business. So because of that, you have to start tracking your business mileage, and you do that through a logbook, okay? So now in the first year, the government's going to require you to keep a logbook for the entire year, Okay, really track meticulously the business mileage that you are doing. As of the second year, they're only going to ask you to pick a representative quarter of the year and track your mileage in a logbook for that quarter of the year. Now, again, you might say to yourself, well, how do I do this? Again, technology is your friend. Just like these innovative apps, there's innovative apps that track the mileage for you as well, that use GPS technology as well. Okay, so again, well worth it to invest in one of these applications, whether it's an accounting application that might do it for you already, or whether you need to use two applications, an accounting application and one that tracks your business mileage. Okay, be sure to use those applications.
Okay, so in other words, your car expenses are deductible, are tax deductible in this case.
Yes, absolutely. I mean, that would be your main. So, of course, by being self-employed, now you're entitled to deduct expenses, right? That's the one major difference between an employee and somebody who's self-employed. With an employee, there are very strict rules as far as what they can deduct and what they're not allowed to deduct. We did a podcast about this previously, right? About those people who are those employees who are required to work from home, for example. Okay, but when it comes to self-employed, there's a broad spectrum of expenses that you can claim. Remember that any expense that is incurred in order for you to make money becomes an eligible expense. That's what we call the general limitation. Okay. So as long as the expense was incurred to make you money, you can deduct it. And of course, when it comes to these sharing economy applications, okay, your vehicle is your expense. Okay. That's your main expense when it comes to what you can deduct. Now, what are examples of expenses you can deduct with your vehicle? Well, you're talking maintenance, repairs, fuel, depreciation, leasing fees if you're leasing the car, for example, insurance, license, and registration. Okay, so these are typical examples. If you own your vehicle, then you're allowed to depreciate your vehicle as well. You can't deduct the full payments that you're making, but you're allowed to use as an expense the depreciation based on the value of your vehicle. And usually the government allows you 30%, okay, every year on a declining balance as a deduction, as an expense for ownership of your vehicle. Now, if we go full circle again to the logbook, this is why now the logbook becomes important. Because for all these expenses that I just mentioned right now, you can only claim them on a prorated basis. Okay, you can't claim the full expense of these. So the logbook will determine what your proration percentage will be. So for example, if you're using the vehicle, 30% of the mileage of the vehicle was used for the purposes of these applications of the side gig that you're doing, well then all these expenses that I just mentioned right now, you're only allowed to claim 30% of the value of those expenses.
Okay. What about a home office expense? Is anything deductible for that?
Yes. So we mentioned before, that employees are entitled to home office expense, especially this year with the pandemic. As we know, we did a podcast on that previously on YouTube and on the other and on the audio podcast as well. Okay, for a self-employed individual, yes, and much more than what an employee would normally be allowed to deduct. Okay, so if, for example, you're doing consulting work, for example, okay, and you're getting consulting fees for your consulting work, and you're working, and your base is from your home office. Well, you're entitled to deduct certain expenses for your business in this case. Now, what are some examples, okay, of expenses you can deduct? So maintenance costs such as heating, okay, home insurance, electricity, and cleaning materials as well, for example. If you're an owner of your property, you could also deduct your property taxes, your mortgage interest, and depreciate a portion of your property as well. Okay, now for the last ones that I just mentioned now, if you were an employee, for example, a salaried employee, you wouldn't be entitled to deduct those expenses. Okay, and also rent, for example, is also another example that you can deduct. Okay, so the home office expenses you're allowed to deduct as a self-employed individual are much broader than as an employee, especially under this pandemic. Okay, so that's essentially what you're allowed to deduct. Now, there are prorations again when it comes to these expenses, okay? Because now all these expenses that I mentioned right now, you have to prorate the value of those expenses based on the square footage that your home office represents vis-a-vis the rest of your home. Okay, so for example, if the square footage of your home office versus the total square footage of your house represents 10%, of your home, then all the expenses that I mentioned before now for home office, you're only entitled to deduct 10% of those expenses. That's all you can deduct.
All right. And what about people who were self-employed before the pandemic, received the CERB, and now are in a position where they had to repay the CERB?
Okay, so there's good news there. Okay, so there's good news there because there was some confusion as to the eligibility of collecting the CERB payments. Now, part of the eligibility criteria to claim the CERB payments was based on what the government calls earned income. So this is income that you worked for, whether you were an employee or whether you were self-employed. So what the government mentioned is the fact that you had to have at least $5,000 of earned income during the year or the previous year, okay, in order to be eligible to collect the CERB payment. What the government failed to mention in the announcement for the CERB payments was whether that $5,000 was based on net income, so after expenses, or your gross income before your expenses. So because of that, a lot of individuals thought that it was on gross income when the government thought it was on net income. Okay, so at that point, a lot of individuals who didn't reach that $5,000 threshold, but had the 5,000 under their gross income, okay, well they thought, well, I meet the criteria because it says $5,000 self-employment income. It didn't specify gross or net, so a lot of people went on the gross, only to find out, nasty surprise at the end, that they had to now repay it because they didn't meet the threshold on their net income. Okay, they had to meet the threshold on their net income instead of the gross income. So this is a really, bad surprise for a lot of people. Thankfully, the government realized that yes, they did not clearly stipulate what they based the $5,000 threshold on. And what they did at the end of last year is they made an announcement to say that if you met the $5,000 threshold on your gross income, okay, in either 2019 or 2020, well then you don't have to repay that CERB benefits that you collected. So that's great news because, of course, this is very painful for a lot of these individuals. I mean, let's not care. $5,000 self-employment income is not a lot of income. So at that point, for a lot of these individuals to have to pay back that amount when they needed it to survive was really, really bad news for them. But thankfully, the government changed their minds and they realized their mistake, and change the criteria, and now these individuals no longer have to repay. Now, the other thing that was announced in that late December announcement is an interest relief on any amount owing, okay, if you collected one of these COVID-related benefits. So for the CERB, unfortunately, the government did not withhold any taxes at source, okay, unfortunately. Now, as employees, you'll notice that in your payroll, you pay your payroll taxes, right? That is you basically prepaying your income tax for the year, okay? And then what happens when you file a tax return is that you're essentially filing a reconciliation statement. You're reconciling with the government whether you've overpaid, which means a refund, or whether you've underpaid, which means an amount owing or an amount due. Okay. Now, the issue with the CRB is that there were no withholdings at source, meaning you've automatically underpaid your tax for the year. Okay. Especially if you've also gained other income during the year as well. So this is bad news because in the end now, these individuals have to pay lump sum that income tax because the government did not have any mechanism for these beneficiaries to pay their income tax through a payroll tax. They had none, right? So they just collected the income, and then unfortunately now they're gonna have a big tax bill to pay at the end of the, as of right now when they file their tax return. Mm-hmm. So the great news there is that again, the government realized that this was an inequity that they had, and what they've done is that they've announced interest relief for these specific individuals. So if these individuals owe money on their tax return, okay, and they received COVID-related benefits during the year, meaning it could be CERB, it could be the program that replaced the CERB, which we're talking the CRB, employment insurance, sick leave related to COVID. Okay, if you've received any one of these benefits and you owe money on your 2020 return, thankfully you won't owe any interest on that balance owing until the 30th of December 2022, meaning you don't have to pay your balance owing right away. No interest will accumulate. No interest gets charged. It gets charged because you meet that criteria. Okay. Now, it's not the only criteria. Okay, you need to have, you have to have collected those benefits, and your income, your taxable income cannot be above $75,000.
However, the tax deadline is still April 30th. Even if you can't pay, you still need to file by the end of this tax year, 2021.
Yes, because we have an interest relief. The government didn't announce a penalty relief, right? And a penalty is when you file your tax return late and you owe money. Okay. And that penalty is not based on any prevailing interest rates. It's a flat rate of 5% off the bat when you're late filing your return, and then a 1% for every month that you're late afterwards filing your return. So there's no penalty relief. Absolutely right, Ida. It's a good point to bring up. There's no penalty relief, which means file your tax return right away as soon as you can, even if you owe money. Remember that even if you file late, doesn't mean your debt disappears with the government. Okay, you still have to pay that amount to the CRA. But the good news is if you file on time, you don't have to pay them right away. You can wait until April 30th, 2022 to pay that balance owing, because you're not going to be charged any interest. But if you're late filing, you will be charged a penalty on that balance owing. So file your tax return as soon as possible.
Well, this covers pretty much everything on our topic today, the sharing economy. Is there anything you would like to add before we sign off?
So just again, all the resources that we offer to everybody as far as being able to, on information on their tax returns and everything that affects the tax return. Everything is found on our website, which is ufile.ca. Do not hesitate to go on our website. This particular podcast is related to a blog article that we've written on this topic. So all the details are there, including everything that relates to the interest relief that I mentioned before. So it's all there. So go to ufile.ca. You simply hover over the tips and tools tab and then choose the UFile blog, and we have several articles in there where we mention about different tax topics that are helpful to you. Now, we also have a great resource as well, which we call Tax and You, on the same website. So on ufile.ca, in the same tab, hover over tips and tools. We've got an option called UFile Tax and You, where you get answers to specific frequent tax questions that are asked all the time. Okay, so all the resources are there to help you to properly produce your tax return.
Well, thank you very much, Gerry. So this concludes our podcast for today. So we'll see each other again in 2 weeks.
Yes, absolutely.
All right. So take care. Thanks. Bye-bye.
Take care, everybody. Bye-bye.